Hello everyone, how are you today? Welcome once again to Online Money with Peter. Trust you're doing great. This is a continuation of our candlestick analysis video. One of my videos previously, I did 3 white soldiers, which is this. You see it at the end of a downtrend. I want to drop a link to this video in the description so that you can watch it if you have not already watched it. But today I want to talk about 3 black crows. You know, the 3 white soldiers and 3 black crows. These 2 candlestick patterns, they are good candlestick patterns if you see them appear on a good location. All right, for a 3 white soldiers, usually should appear on a very strong support. All right, when it appears on a strong support, when it's been trending down, and then it appears in a strong support, and this is a reversal candlestick pattern, then you can place a trade. But for a 3 black crows, it appears on a resistance. You know, when the market is trending, it actually doesn't trend forever. All right, so it trends and then it gets to a particular price, and then reversal will take place, and that is where we have the 3 black crows. All right, when it's trending, it will find support on the resistance, and from there you see the formation of a 3 black crows. All right, so let us take a look at another picture. All right, so this is another picture of the 3 black crows candlestick pattern. All right, and okay, let's see. All right, we see that usually you see 3 consecutive bearish candlestick pattern on a resistance. All right, now let's assume that it is a 1 hour candlestick chart. After 1 hour, the next hour a candlestick is formed, the next hour another candlestick is formed, and then you see these 3 consecutive candlestick pattern on a resistance. Then this is a 3 black crows candlestick pattern. Also, we'll take a look at another one. Okay, it's another one. You see, all right, the price has been going up, and then it gets to a resistance. Then you see these 3 candlestick patterns, 3 black crows, and after the candlestick patterns are formed, you can see what happened. It just kept going down. All right, okay, so 1 hour, 2 hours, and then 3 hours. You can see that it keeps going down. Now, for this to be reliable, of course, it should appear on a strong resistance. All right, so let's take a look at another chart. Okay, so this is a chart also. Now we see that, of course, its range was ranging here, and then it went up, retraced and went up. At this point, we see this doji, long leg doji formed, which means weakness of the buyers at this point. This is a strong resistance zone, meaning that there are sellers at this zone waiting to sell into the market. There are sellers here. All right, so when this candlestick is formed, this 1 hour, assuming is 1 hour, there's another 1 hour, there was indecision or weakness of the buyers at this point, and then the sellers came in and pushed the price down. Now this is a 1 hour candlestick, for example. After the 1 hour candlestick, you see the next one, another hour, you know, the next 1 hour again, so for 3 hours. All right, so we have this 3 candlestick pattern. So when we see this, probably reversal is going to happen, and then we should be ready to place our trade. All right, depending on the kind of trader that you are, it could be a daily candlestick pattern, it could be a 15-minute candlestick pattern, it could be a 5-minute candlestick pattern, depending on you. But for me, let's assume this is a 1 hour candlestick pattern. Now, how do you trade these 3 black crows? How do you trade it? Now, when these 3 black crows appears on a support, and ideally you should when these 3 black crows appears on a resistance, and of course ideally the resistance should be a strong resistance. Not all resistance are reliable, so it must be a strong resistance. How do you know a strong resistance? When you go back a few hours ago or a few days ago and see that at this price, you know, the candlestick had been reversing at this price previously, maybe 2 or 3 times, then you can see that as a strong resistance. All right, so when the first candlestick is formed, you shouldn't take a trade. You wait for the second one and then the third one. Then after the third candlestick is formed, then you have a greater probability that the reversal is going to continue to go down. And then you place your trade few cents above the third candlestick, just few cents above it, maybe somewhere here. All right, and then your stop loss would have to be somewhere here above, a little bit above this candlestick wick or shadow, a little bit above it. And take profit can be according to your risk to reward ratio. All right, could be maybe 2-to-1 or 2-to-1.5 or 2-to-3 depending on you. So if, let's assume, the trade is taken here, your take profit maybe somewhere here. You see that after some hours before the end of the day, the take profit was, it's going to be heated by this candlestick and your account will be credited with your profit. I know your stop loss is here. It did not go back to hit your stop loss. It kept going down. All right, you might not really see this candlestick pattern, 3 black crows, often, but when it appears, it can be a very good, reliable candlestick pattern that you can trade and make profit trading the forex market. All right, so thank you very much. This is just a brief video on how to identify candlestick pattern and how to trade it. Now, if you have not already subscribed to Online Money with Peter, on this platform I teach you how to make money online, and forex trading is one of the ways you can make money online. I also trade forex, so I decided to show you how to make money online trading the forex market. So subscribe so that subsequently, as I upload more of this video, you're one of the first to be notified. If you are not a member yet and you are interested in being a member, kindly become a member and you'll be getting member videos that will help you to make money online, not only with forex but also using other platforms. Thank you very much, and I'm going to see you next time. Bye bye.